Welcome to Satya Skills. In this video, let us learn about Board for Financial Supervision established by the RBI for better supervision of banks. The Reserve Bank of India is the apex institution and apex authority of banking, finance and money markets in India. To undertake consolidated supervision of the financial sector, the RBI constituted Board for Financial Supervision, popular as BFS. The board was constituted in November 1994 as a committee of Central Board of Directors of the Reserve Bank of India under the Reserve Bank of India Board for Financial Supervision Regulations Act 1994. The primary objectives of the board was to supervise the financial sector comprising scheduled commercial banks, scheduled cooperative banks, all Indian financial institutions, local area banks, small finance banks, payment banks, credit information companies, non-banking finance companies and primary dealers. Constitution. The board is constituted by co-opting 4 directors from the central board as members and is chaired by the governor. The deputy governors of Reserve Bank of India are the ex officio members. The deputy governor in charge of supervision is nominated as vice chairman of the board. The functions of BFS are oversees the functions of, that means previously these functions were performed by. So, those were the Department of Banking Supervision, Department of Non Banking Supervision, Department of Cooperative Bank Supervision, and the board gives directions on regulatory and supervisory issues. Some of the initiatives taken by the BFS include enhanced the efficiency of supervisory mechanism adopted by the bank, introduction of off-site surveillance system to complement the on-site supervision of regulated entities, strengthening the statutory audit process of banks and enhancing the role of auditors in the supervisory process, strengthening the internal defenses within supervised institutions such as corporate governance, internal control and audit functions, management information, risk control systems, review of housekeeping in the banks, etc. Introduction of supervisory rating system for banks and financial institutions and supervision of overseas operations of Indian banks, consolidated supervision of banks, technical assistance program for cooperative banks, introduction of the scheme of Prompt Corrective Action Framework for weak banks, guidance regarding the fraud risk management, and then introduction of risk based supervision, introduction of an enforcement framework in respect of banks, establishment of a credit registry in respect of large borrowers of supervised institutions, setting up of a subsidiary of RBI to take care of IT requirements including cyber crime security needs of the Reserve Bank of India.